Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over my portfolio and premium distributions a little bit earlier. I'm flying out for the next week for my sister's wedding. I'm not going to have my normal workstation set up, so therefore I still wanted to get out some content. Still care about the community, want to hear what you guys have for your premiums and distributions, but just wanted to make sure I'm consistent with my videos. Let's get started. So as you guys can see, the stock market has been going a little bit higher. My account is at $102,455.35, right? The reason why I like to talk about my brokerage, there's a lot of fake people out there that aren't necessarily transparent. They're going to have some thumbnail where they show, oh, I have $300,000 account, but then $200,000 margin. For me, this account, if I sold out of all of the shares and ETFs and stock I'm in, this is what my net would be. So $102,455.35. So let's talk about my actual holdings. As you guys can see, my 2-year leap for SPY has disappeared. So what I did is I sold out once the stock market hit that threshold I was looking for, that 603 mark, right? And then with that, I bagged about $493 of just trading and options, right? And what I usually like to do for options, I keep it very simple. And what I mean by simple is if there's a dip for 2 days in a row, I'll usually buy a 2-year leap, anticipating that the stock market's going to recover that price sometime in the next 6 months to a year. But usually it's going to be faster than that, because if you look at the SPY, it kind of fluctuates up and down, up and down. All right, guys, I'm not going to try to bore you to death with each of my holdings, but I'm going to kind of give an overview of like just the strategic vision. So in June, I took about an $80,000 HELOC loan against a rental property I own. I threw that money into Robinhood, borrowed against it. So now my account looks at $266,000, right, of total value, right? But what you're seeing here is if I sold out of everything, I'd be at $102,000, right? But the way I look at this is I have my funds broken down to 3 different tiers. Tier 1's a more high premium, high volatility. So that's my YieldMax funds. That's why I invest in nvdy, ymax, and ymag. And there's certain considerations I have for each, right? So for my nvdy shares, the whole purpose of my nvdy shares is to pay back my HELOC loan. I currently have that loan down to about $49,000. Initially was at 83. Now it's down to 49. This project has only been around for about 8 months. So it's doing pretty good. Pretty soon I'm going to have no assets at risk, but then I'm going to have a fully funded account without putting in my own hard earned money from like working overtime, things of that nature. But yeah, so my tier 1 YieldMax stuff. Tier 2, I consider a fund that has a little bit of NAV erosion, a little bit of appreciation. The premiums are pretty high, or the share price is relatively stable where it is. And so that's what I consider my xdte and rdte. Moving on to my final set of investments, it's like jepq, gpix, amzp, and goop. So those funds, they have share price appreciation and they have distributions. They're not going to be as high as what a YieldMax will produce, except for Kurv. Kurv has been surprising me. I've been getting share price appreciation and on top of that, a pretty high distribution rate. So I'm definitely thinking maybe I might reallocate some money from jepq and gpix into something different. But, you know, I kind of like having a little bit of diversity because I am invested into a lot of funds that they're just doing options, right? It's not, they're not actually owning the shares. They're just running options against it. So I definitely think having gpix and jepq just running covered calls and funds that or shares they already own, I think it's a safe bet, right? That's kind of the strategy, right? And long term, my vision is eventually I'll have this HELOC loan paid off in the next year to about 18 months, somewhere between that range. I could probably pay it off sooner if I just put more capital towards it from these distributions. However, at the same time, one of the biggest, wonders of the world is compounding. So if instead of like paying off debt, I grow this account, I think that's going to be better in the long term. So that's kind of like that trade-off, right? But yeah, let's look at the spreadsheets now. Well, so here is my beautiful spreadsheet. So for the 4th week of 2025, the amount of premium I have received for that 4th week is $2,503.99, right? If you add up each one of my distributions and my stocks I have traded or just received from, the distributions from like YieldMax, Roundhill, Kurv, gpix, jepq, I'm currently sitting about $8,200 of premium in the month of January. So if you annualize that, that's almost $90,000 a year for me with relatively low investments, right? 4th week, pretty good moving forward, right? And if we look at my entire total account value, as I said, right, Robinhood showed only $102,000, but I'm actually invested $266,000, but I don't want to like buff up my numbers and just get people clicking because they see a bigger number, right? Eventually I want to grow it to $266,386.73 naturally. And as you guys can see, my account in total has gained about, $5,000 in value. So that's definitely what I want to look for in these high income ETFs. Right. And let's go forward. So this first fund we're going to look at is xdte, and currently it is at $60,674.54. Right. That's the highest this xdte has been for me, because I have about $60,000 invested. So I'm net about $674. That's exactly what I want to see. And looking for the premium, xdte for a $60,000 account paid me $252.12. Now time for rdte. So for rdte, maybe I'll move this over so that, yeah, maybe I'll start doing that. Yeah, so for rdte, the account value for that is $59,438.19, right? If we go over to the amount of premium that was paid, it's about $285.84. Okay, so for my ymax weekly value, we're at $18,575.33. And the amount of premium I was paid was $195.01. For ymag, my weekly value is $19,698.01, basically up about, $300 or $200. Sorry, oof, my math is off. Right, it's pretty much up $200 since last week, but I put about $20,000, and so I'm technically still down and still receiving a premium. Cool. Moving forward, and the ymag premium was $103.66. Moving forward to the amzp weekly value, we're at $41,601.44. Currently, that's about $1,600 more than what I invested in. So we're definitely getting that, share price appreciation, and we're also receiving a pretty big premium payment, right? So that premium payment this week was about 70 cents a share. Yeah, and if we see here, the amzp's premium payment was $858.90. Moving on to Goop. What I bought in Goop at was about $20,000. Currently, the fund is at $21,702.96, which has appreciated about $1,700 since when I bought it at. So share price appreciation and a premium. The premium for Goop this week was about 45 cents. So not as nice as what amzp was providing, but I can't complain about share price appreciation and receiving a pretty big premium. And if we look at the premium actually paid out, is $315.45. We're going to take a look at nvdy here. All right, I didn't receive a premium payment, but might as well call it out. The account value for nvdy was about $35,325. And that's pretty much what I paid for the shares. And I received a couple of premium payments, so that was nice. Earlier January. And yep, no premium payment. So yeah, guys, that pretty much wraps up the video. Wanted to call out my portfolio, how it's been doing, the premiums I've been getting, and kind of just give an overview of the project itself and what the strategies are moving forward. Hope you guys enjoyed the video. Let me know in the comment section what you guys think. How much premium have you guys made in the 4th week of 2025? Or just tell me what you've made in general. Yeah, can't wait to hear from you. Love you guys. Talk to you later. Enjoy your journey. Matt out.